Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
We had really good feedback for the silk jacket,
Yes.
raw silk. I wore it again with different shirt. And this is what Juana wore to work today.
Yeah.
There was like nobody there except for you.
Yep.
Okay. All right. Today, anything else we need to talk about before we start on the video?
We appreciate you being here. Let's go.
Okay. All right. We're going to talk about the new numbers that came out, the National Association of Home Builders. This is kind of boring stuff, but what's cool is there's some stuff in here we're going to talk about because it's worth knowing and understanding. It has to do with incentives that builders give.
Right.
Because we're going to talk a lot about that. We have a lot of experience with new home builder incentives. Okay. All right. Data released by the National Association of Home Builders indicate the U.S. home builder sentiment increased this month for the first time since August. The decline in mortgage rates has increased prospective buyer traffic and sales expectation. Mm-hmm. What's interesting is this data lags a little bit. We're likely to see data in the like January, February that's probably off the chart. Like this,
Right.
This thing is probably only going up for 6 months. This index,
Right.
this sentiment.
Mm-hmm.
It's really a sentiment. Okay, so what we're going to do here is we're going to jump first into the chart. Now the chart is an index from 0 to 100. Mm-hmm. What does this all mean? Like, what is the chart?
So
0 is the bottom.
Right. So 0 is the bottom. So 50 is like that middle place, that baseline, right? Anything below 50, not so great. Everything above 50, woohoo.
Okay, it's sentiment. It's what people think. They measure three things. They measure how many people came in the sales office. Mm-hmm. So they report that. They say how many people came in and like looked around, and whether they buy or not. Then they asked the builders, how many people do you think are going to buy in the next, say, 6 months, 9 months, or year?
Right. So like when people come into the sales office, that's one of the things that they have to fill out is this little interest form. And that's what they ask you. You know, are you looking to buy within a month, 3 months, 6 months, whatever?
Yeah. And then the last thing is their current rate of sales. Mm-hmm. They find out how many homes you have under contract right now. And then they track it all and they come up with this index. So what's interesting, first of all, this chart is you can see cyclicality. Because there are more people buying in the spring, summer, you know, you see those it's rising there, and in the fall, winter, it's declining. Mm-hmm. If you go all the way back to January of 22, it was only high because what were interest rates in January of 22?
Oh, so January of 20, they were probably about maybe 5.
No, they were still 3.
Wait, 22. I'm sorry.
22.
Thinking 23.
Yeah, they were super low.
Yeah.
Right, they were super low, so people were still super excited because you could go to a builder and get a 3% loan and have a home built.
Right.
And this was during the days of interest lists. You couldn't get. Had some clients that were buying. That we actually had a bunch of investor clients that bought in 21. And what was it like this time frame going into a new home builder?
It was busy. It was hopping.
If you walked in, and was it common to walk in and them say, oh, no, we just sold the last lot? Like there's nothing available.
Well, it was common to, not have anything. As a matter of fact, but even now, there are lots of home builders that don't even have model homes open, don't even have sales offices open because they have nothing to sell. They have not released lots. A lot of them are not releasing lots until late January or sometime in February because they're still trying to finish up what they have.
Okay. On this chart, it shows that this past spring, which for the most part was not a booming housing market, was a strong housing market, was in the 50s. I'm going to tell you right now that June, July of next year, this number will be in the 60s at least because interest rates are going to drop. Home builders are going to build up, a few more homes. Mm-hmm. And I think the resale market's still going to be tight. I think people are going to buy into new homes, and sentiment will be extremely high from the home builders. What do you think?
Yeah, no, I think sentiment is already high from the home builders because, like I said, they don't have any inventory. Interest rates are definitely going down, and it's interesting because I was chatting with a buyer, and he was like, "Well, such and such builder is offering me 5%, 5% and change loan, but big deal, I can get that on my own. That's not an incentive."
Right. Yeah. Here is the first the first quote from the article. 36% of builders surveyed by the NAHB, National Association of Home Builders, reported reducing their sales prices, matching the highest point of 2023 reached last month. So they 36% reduced their sale prices. But this does not mean bargain discount sales, right?
No. So, look, I think the thing about new home builders is they kind of play the shell game, right? So they'll have certain incentives, and then they'll maybe reduce the incentives but raise the price, or lower the price and increase incentives. That they'll do this whole thing. And even the incentives, they're really not real incentives, right? Because what are the incentives? The incentives are so much money toward the design center. Well, they control the design center. They control the costs at the design center. They'll say, well, so much of an incentive if you use our lender. Well, it is their lender. They're making money off the lender, so they want you to use their lender. So it's this whole thing where they make it seem like you're getting something when actually they're getting something.
Right. That leads us to our next quote. The percentage of builders offering sales incentives did not change month over month and remained at 60%, dropping marginally from 62% recorded in October. One is this theory out there that the home builders are having to give the homes away, tons of price reductions. No one wants to buy the homes, that they're all offering these deals. None of them are making money. Let's first talk, we're going to tackle all of those. Let's talk about incentives. Let's say that I walk in and I say, I already have a lender. It's Joe with Banana Mortgage. And what would an incentive be to use the builder's mortgage? Like, give me an example. What might they do if I use the builder's mortgage or lender?
If you use a builder's lender, they might say, okay, well, when you go to the design center and you pick out your flooring, your cabinets, and all that good stuff. Because remember, you want cabinets, that's extra, right? You want flooring, that's extra. Everything's extra when you go to the design center. So they'll say, okay, well, instead of paying 75% toward your design center, if you use our mortgage company, maybe you pay 25% toward the design center and down payment. So when you pick out your things, you have to actually write a check. So that makes a difference as to how large a check you write. So if you're going to use their mortgage company and you only have to pay 25% of the design center costs up front, that's a benefit to you versus paying 50 or 75% of the design center costs up front.
So it doesn't negatively change how much you have to borrow or come up with closing. All of these sales incentives are not necessarily you get less, like a cheaper house.
No, not at all. You're still paying the same amount at the design center. It's just a matter of how you're paying it and when you're paying. So whether or not you're tying up that much cash. So to kind of give you a perspective, probably most people spend over $100,000 at the design center, and you're going, oh my gosh. Well, like I said, you've got flooring, you've got cabinets, you've got plumbing, you've got electrical, you've got all these things that, they all add up. So a lot of people do end up spending quite a bit of money at the design center. Most people spend at least 20% of the house value at the design center. So if you're paying, $500,000, $600,000 for a home, you can see how, that money's going to add up. So if you're only having to pay a smaller portion at the design center, then you don't have as much money tied up from the start in the house, and you can continue to have your money work for you.
A super easy one is that I see all the time are appliances. Mm-hmm. You get appliances for whatever. Oh, if you go under contract in the next 30 days, mm-hmm. we're offering appliance packages to people.
Right.
That you have to sign the paperwork and put your deposit down within the next, mm-hmm. by the end of the month kind of a thing, right? Yeah. And those aren't a ton of money. I mean, they're not huge. If you're buying a $600,000 house, a couple thousand, they're not going to be like the top of the line.
You're not
Viking.
Right. You're not getting Vikings or Sub-Zeros. Okay, you're getting Whirlpools and GEs,
right.
Maybe.
We're not dissing Whirlpool or GE.
No, but I mean, you're getting the same kind of appliances that you would get at Home Depot, at Lowe's, at Costco. That's what you're getting. You're getting nice appliances, but they're not going to be extravagant appliances.
What's interesting about this is that when people either, when they buy a house, they do one of two things. They either go into the resale market. Some people call it used houses. You can call it whichever you like. There's advantages to buying in the resale. Mm-hmm. And some people go to new homes. There's advantages to going to new homes. And an advantage is you can get exactly the house you want. I want this exact tile in the bathroom. I want this exact flooring. I want this exact cabinet, right?
Yeah.
What are some advantages of a resale? That why would somebody go into the resale or formerly occupied or used homes? Why would they prefer to do that versus going to a new home place?
So one of the reasons is because you've got an established neighborhood. So you already know everything that's going to be around you. So when you're buying new construction, a lot of times maybe there's vacant land around the community. So you think that there's going to be X, Y, and Z on that land, but remember that can all change. It can get rezoned or postponed or whatever. So if you have a resale home, then you know exactly what's around you, you know the neighborhood. Another reason would be because the landscaping is done. A lot of builders don't put in landscaping for you, so maybe the landscaping is done, the pool is in, things like that. Maybe some built-ins are in the house, or maybe a built-in entertainment center is there that's going to be staying because it's built in. You know, all kinds of things like that. Maybe they've got nicer appliances. Maybe they've got nicer light fixtures. Maybe they're leaving some of the furniture behind. All kinds of reasons like that why you might choose resale.
The biggest benefits are you're going to get, if you're getting a pool or you want landscaping of any kind, buying a resale home probably already has those.
Right. And it makes it easier because it's easier to finance it. When you're buying new construction, sometimes you can roll those costs into the loan and sometimes you can't. So with an existing home, those are already there, so that's already wrapped up in the loan if you need a loan to purchase the property.
What's amazing about these numbers is that it rose, but remember these are homes that went under contract in the past at higher interest rates. Mm-hmm. So it is highly likely with lower interest rates, which is we're likely to see going in the spring, that the new home builders will continue to do well. And remember, 2022 was a record year for all the home builders, despite the propaganda that was out there at the end of the year that there were 30-40% cancellation rate. Well, there was a cancellation rate, but all those homes just went back under contract. They all sold. Because if you tried to call in January to buy a house, no one had any homes. Everything was under contract. And then 2024, I just read some projections, KB Homes and I think D.R. Horton are predicting more sales at a higher price. Mm-hmm. They're going to sell more homes at a higher price, at a higher margin, and at higher total profits. Like both of those companies, those are their forward-looking statements for what they expect for 2024. And I don't think they're making that up. I think they actually have data. They're looking at, how they did this year.
Right, but I think they're looking at it the same way I was talking about it on the video yesterday, where I said, well, with lower interest rates, the payments will actually stay the same because the prices will go up.
Yeah. So that was it. We just wanted to talk about this data that came out, what it means. But the biggest thing are this idea of incentives, because the thing I hear is, but I heard builders are having to drop their prices by 60%. And it's like, no, that's not what the 60% is. And actually, the 60%, it doesn't even mean they even changed the price. They may have just given you some extra thing that has nothing to do with the value of the house.
Right.
Or anything that costs them significantly more.
Right. And you know that because when you go to a new home builder, the lot premium, that hasn't changed. So, lot premiums are always interesting to me because a lot of times the lot premium can be 20-30% of the purchase price. So if you're spending 20-30% of purchase price on the lot premium, plus you're spending another 20% at the design center, you're kind of getting where I'm going with this, right?
Right.
I mean, that $600,000 home all of a sudden is pushing, close to $1 million.
And if you're wondering why they do this lot premium, let's say they're luxury homes. And they'll say starting in the 900,000s. Mm-hmm. Oh, 900, that's under $1 million. Let's drive in there and check it out. And then you find that the cheapest lot premium is $75,000. And that's your interior lot, doesn't have any views, it doesn't face anything. It's the smallest lot. It has the small, everything about it's average. And that's the basic lot is $75,000 premium, because now they can say it's under $1 million or in the 900. Base price is in the... But yeah, the base price home is $900,000, but there's no way you're walking out of there for under $1.3 million between the lot premium, the house, and if you want anything other than the standard everything in the house.
Right. So what's interesting is usually the lot premium was for a lot that was premium. It was up, you know, it had something special about it, right? You were in the cul-de-sac, or you had a view, or, you know, something, or it was an extra large lot, something like that. But now it's not like that. Now every lot has a premium. It's just a matter of the amount of the premium.
I bought a Toll Brothers house about 20 years ago, and they actually had lots that did not have a premium, but they were 5,000 or 6,000 square foot lots. So it was basically a very small footprint for these luxury Toll Brother homes. The lot I bought had a $7,500 premium to go from your standard 6,000 square foot lot. This lot was 10,500 square feet. And I'm like doing the math. Now remember, this was 20 years ago. Prices were less, but for me it was like, yeah, $7,500 to get 3,500 more, you know, square foot of yard, basically. Was a huge, you know, selling point. So, but today it's, you know, Juana and I have seen huge amount. Like there was the Sun City homes, they were 80,000 to be on a golf course. And this was a home that was 300,000 to build. It was $80,000 to be on the golf course because you had a really nice view generally. Right.
So lot premiums are can be very exorbitant. Anyway, hope you had fun with the video. Please remember to subscribe and hit the notification bell. Like the video. Leave us your real estate related comments. Tell us about the lot premiums where you are and what's going on, because I think that's interesting. And we'll see you on the next video. Bye.
Bye.